Well, today's gem is ideal if you're over 60 and still in the workforce. It's a really easy way to save tax and get more into your superannuation fund. What the strategy is called transition to retirement, which basically means for those who are over 60, they're able to start a superannuation pension from their accumulated superannuation savings. Of course, because they're over 60, that income is tax-free in their hands. So what that allows the individual to do is pull out money from their superannuation fund free of tax and then increase their salary sacrifice contributions back into superannuation, which of course are only taxed at 15% rather than being taxed at their marginal rate. So in a sense, really all we're doing here is pulling out money out of the superannuation system tax-free and putting it back in at a discounted rate to your normal tax rate. Who this strategy suits is those people who are over age 60 and still working and obviously have money in the superannuation system. The other key qualifier for this strategy to work is that they have taxable income over $37,000 a year. Have a look at how this actually works. So consider someone who's 60, who has $200,000 in the superannuation system, earning say $60,000 a year. What they're able to do is withdraw up to 10% of the value of the superannuation fund in the form of a pension. So this person can take $20,000 a year tax-free out of the superannuation system. So let's now have a look at an example of someone who's 60 who's got say $200,000 in superannuation, earning a salary every year of $66,000 a year. So what this person can do is they can withdraw out of their superannuation fund a maximum of 10% of the value of the fund, which is $20,000 a year, and that money is paid tax-free to the individual. Now, the pre-tax equivalent of their salary of $20,000 after tax is actually $29,000, and that's simply $29,000 to take off 30% tax. So what we're going to do with that $29,000 now is salary sacrifice it back into superannuation, which of course only attracts tax at 15%. So the bottom line of what this means is that the individual can receive $20,000 from their superannuation fund tax-free, and for exactly the same after-tax money, put back in $29,000 back into the superannuation system, which even after allowing for the contributions tax means that they're putting back in about $24,500 versus taking out $20,000. So for exactly the same money, this person's creating wealth of about $4,500 per year. So we think it's a no-brainer for those who are over 60, who've got money in superannuation and are still working. The things to be careful of are make sure that you don't exceed the contribution limits because that can undo the whole tax effectiveness of the strategy.